Okay, so we've got the three charts set up here. On the far left, just to reorient, we've got the 15-minute chart. Across the top here, we've even got the VWAP on here as well, the volume weighted average. Price, that's these dashed lines here. The third one out is the third standard deviation. The green one's the second, the white one's the first. Looking down here, we've got the RSI across here. I'll talk through that as well as the MACD. Now, these are configured at levels that make them more reactive to recent price action. Here in the center, we have the 9-tick chart. And again, this is set on a daily basis, right? This is depending on what's the current activity going on in the market. And so if you look over here, you've got each bar here is going to comprise of 9-tick movement across the day. Now there's some special signals on here that I sort of refer to as the three amigos. We've got this is really the MACD histogram crossover. And so we've got it pushing down here, as well as this is just a custom formula that I've written. It's actually pretty simple. It basically looks at the intensity of the MACD. So first signal is, hey, it's crossed over and it looks like it's heading down. Second is the level of intensity of the MACD, which says, all right, this looks like it really is pushing down. But what's missing is the third amigo, which is the RSI. There was just no momentum behind that, and so it stayed up here. So we wouldn't take that trade. We wouldn't enter in it. Coming over to here now, we've got the crossover heading up. We need a second amigo here. The RSI intensity kicks in. That's our second signal. And now we've got our third signal, which is the MACD intensity kicks in as well. When that happens, now if you look on the right side on the 4-tick chart, you'll see that we start to get a signal that says, let's enter. What we're waiting for over here on the right side, let me expand this just a little bit, make this a little easier to see. So what we're looking for now is for a price here on the 4-tick to come above the 6 EMA. So it's either going to be this one or this one. You enter the trade. Now when that happens, when you enter the trade, and you can see the RSI on the 4 is also pushing up. We've got the fast RSI, which is the red line, is at 60, saying this is looking good. And the yellow RSI is above the 40. That's looking good. The MACD on the bottom is also showing positive. It's above the line. It's just turning green here, which is positive. So yeah, it's green lights all the way around. We have what I call confluence. When we have that confluence, then that's when we go ahead with the trade. We put in a trade with at least 2 contracts. The first contract has got a range that's about half of what the small range chart is. So we make it 2 or 3 ticks. That's to pay for the trade. Once that's done, then that gives us another contract to follow and to take it up. Now, when we follow, we set it at first below the previous bar, and we'll let that sit for a while on the 34. As the distance grows, we'll come up to the 21. And as the distance between that grows, then we'll start following a few ticks below the 6 EMA. And we would have been stopped out right here. Okay.